All right, guys, welcome back. Back to work tonight. Hope you guys had a fantastic day. It's Tuesday evening. We're getting ready for what should be a very busy Wednesday trading session. We've got one of the biggest news reports of the quarter. Got big CPI report coming out, inflation data coming out tomorrow morning. And I'll tell you, looking at the charts across the board tonight, a lot of great trades setting up on our radar for Wednesday. I'm going to cover all my favorite trades in the video here tonight. Then we have a game plan to make some money tomorrow. Before we jump in though and talk about my favorite trades, lots of traps I'm tracking here for tomorrow. Before we dive in though, make sure you subscribe to our channel, that way you don't miss tomorrow night's video upload. And if you enjoyed this stuff tonight, do me a favor. I appreciate you guys tuning in. If you like these videos, hit that like button for me. Give me a shout out, give me a holler down in the comment section below. Either way, thank you so much for stopping by, supporting the channel here tonight. But enough of the intro, right, Joe? Wednesday is not going to trade itself. And I'll tell you, looking at the charts here tonight, a lot of great trades we're tracking here for Wednesday. Now, starting off on the 60-minute big picture chart on the S&P and the Nasdaq, I like to use the 60-minute chart to give me a big picture look, find some important levels, and help me plan my trades and the type of trades for the following day. I'll start on the big picture, and then I'll move down to tick charts, and we'll plan the specific entry techniques, specific entry setups off the tick charts a bit later on in this video. So, starting off on the big picture 60-minute, both of these markets right now, the S&P, are overall bullish. So we definitely do have a little bit more of a bullish bias going into both the S&P and the Nasdaq on Wednesday. But those bulls may not have a very easy job tomorrow. As you can see, that the S&P is basically a bearish short term into a trading range. Now, ranges act like magnets. If you guys taken my free trading classes, you know that ranges act like magnets. And look where we are. Range below us, resistance, major resistance up overhead. This smells like a great spot for a bull trap and a reversal off of that high. So I definitely have some bull traps on my radar up here. We also, of course, have that big CPI report tomorrow, so I'm definitely keeping my eyes out for some breakouts, some breakout pullbacks, some bear traps off the high of that range. So I think we definitely have some great opportunities, both the long side and certainly the short side, with some traps off the high on the S&P. The Nasdaq is in a very similar spot here. Overall bullish, but really for the most part, we're kind of fleshing out this big trading range. You can see kind of developing here right now with that rectangle range right in the middle. The name of the game when it comes to ranges like this is to buy low and sell high. And right now, much like we talked about last night on the S&P, the Nasdaq is following in the same footsteps and trying to rotate, running higher here. Think about this again. Range below us acts like a magnet. Resistance. This just reeks like a bull trap up here. So we're definitely looking for some reversals off the high. And again, right, we certainly will be prepared for anything to happen around that CPI number. I got some great bear traps if we do take out those lows and some breakouts going higher. So there'll be no shortage of great trades we'll talk about tonight on the video. Now, before we drill down and go down to those tick charts to talk about the specific entry techniques to capitalize on these traps and reversals, let's take a look at the schedule for tomorrow before we jump in and go into more detail on the specific setups. There are two things you want to be aware of here for tomorrow. Obviously, again, that CPI number coming out at 8:30 Eastern Time. That is the big headline news of the week. It's arguably the biggest news of the month, and potentially, because everyone knows the Fed is hinged on the CPI report, it could be one of the biggest reports of the third quarter. Later on in the session, that beige book, right? These are the notes from the FOMC announcement 2 weeks ago that will also be on our radar. We oftentimes see a nice jump off the beige book in the afternoon, so keep an eye on that tomorrow. One thing you want to be aware of, though, overnight, everybody's waiting for this CPI report tomorrow morning, bright bright and early. So please be careful overnight. These markets may slow down pretty considerably. Trading is like riding a bicycle. It's much easier when it's moving. So if it's slow overnight, don't force it. My goal here is tomorrow morning, we'll open up our trade room, 8 o'clock Eastern time. We'll prep charts to see what happened overnight. We'll let that news come and go, and we'll trade the reaction to the news tomorrow. We're not going to be making predictions and trading off that CPI number. So tomorrow morning, we'll trade that reaction. Let's talk about the game plan now, though. Right now that you know the schedule for tomorrow, let's go back to our charts, because the money is made on the charts, which reminds me, if you like making money, make sure you watch the entire video here tonight, because every trade I talk about can apply to your favorite market. Let's jump in now to the S&P first. We talked about the 60-minute, right? We talked about overall bull market, right? Rotating off the low. We're in a tough spot right now to be a buyer. I'd love to get some shorts right off the high. If we can, some longs off the low. But right now, it definitely looks like we're in a spot here for some great bull traps as we go higher. Let's drill down now to our tick chart. Now, tick charts, I like to use tick charts in our trade room because they make everything easier. They make finding levels easier. Entries are much easier. Trade management is a whole lot easier. This is a 7,000 tick chart. You can see in the upper left-hand corner. And that, of course, as always, is the 21 EMA if you're watching here for the first time here right now. Now, what's the most important factor that we have here right now on the tick chart in front of us? Well, there are probably 3 key components that I have on my radar. First of all, is this range below us. We talked earlier about how ranges act like magnets. Keep it in mind. Next thing is overhead resistance. This is the same bullish objective area we talked about in last night's video. It's very difficult to want to buy up here. There is one scenario, though, I will talk about later on, that will start to tilt us more to the buy side. We'll talk about that one scenario I'll be watching for tomorrow. But unless we get that one scenario for tomorrow, this is a very difficult spot to be a buyer until we see a very strong breakout. And the third thing is this channel. Now, we talk a lot about channels in our free trading classes. They're very effective trending tools. And what do you notice about that channel? It's an overshoot of that channel. Overshoots, the amount we overshoot that channel, oftentimes will overshoot on the opposite side. So think about what's happening right now. We have what could arguably an overbought market, right, into lots of resistance with that range down below us. Again, it's easy to see why it's difficult to be a buyer up here. So how do we short this thing, right? There are 3 different ways I'm looking to short this thing off the high. The first one is going to wrap together 2 of my favorite trade patterns you guys are learning in the free trading course. It'll wrap together what I call a failure pattern and a trap pattern. If the failure and trap pattern get together, they create what's called the crown reversal. So strong run up, lots of momentum right now for the buyers, right? Lots of momentum, but not a great spot to be a buyer here. The goal will be to use a failure pattern. In other words, let those buyers try a couple times to get long into this area of resistance, and then we're going to use a trap pattern to grab a bull trap off the high. Nice signal below that 21 moving average, and that drop back down again. Now, again, if you're taking my free trading classes right now, we learn about failures and traps. This combines both of them. It's a bull trap above that high, lower low in price with that bull trap. And again, we're ultimately trying to trap these buyers in and use their stops, right? Use their pain, as we always say, right, for that reversal going back down into that trading range. That's one way I'm looking for a bull trap off the high. Another very common scenario when you run into overhead resistance like this is we may end up getting what I call a 1, 2, 3 reversal. In other words, we get below the moving average, we pull back, and we jump off of that moving average, right? This is one of the easier ones because now what you can do is you can draw a trend line off the low. Now watch closely, bring it up around the high, right? So if I do that, I anchor it off that big high up there. Now here's the trick. Look left and find some prior swings. These are usually where the best shorts are going to be. Now, on this example, this is a bull trap, right, above a prior high. It may also get on above that moving average and grab a failure pattern, right? Get above the moving average, buyers try, and use a failure. The bottom line is we don't know what entry pattern we'll get off the top of that channel, but if we do see this 1, 2, 3 and that jump going back into that trading range, we now know the amount above the range, project the amount below the range. We now know roughly about where that market wants to go, and I'll look for any of the entry patterns, specifically bull traps and buyer failures off the top of that channel, which reminds me, I'm going to talk a lot more about these entry tactics in the video here tonight. I know a lot of you guys have already taken my free trading classes. You've learned all these setups. I love seeing those winning trade screenshots. You guys keep emailing me every day, so keep it up. But if you're one of the few folks right now who haven't taken that free trading class to learn the strategy and all the entry tactics, I'll put a link up there for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy I teach in that video series will show you a simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be each day. And I'll teach you my 4 favorite entry patterns to kickstart you making money on your own. If you're taking too many losses, if you're missing too many good trades right now, definitely grab that link that popped up there. Take that free course. You're going to love it. And also, too, I'll put all the important links here tonight down in the description of the video. So if you can't grab that link in the upper right-hand corner, it'll be down in the description there as well. You're going to love that free trading course. Okay, so now we've talked about the crown reversal, right? The crown reversal, the 1, 2, 3 reversal, right? Which again, draw the low off that high and then hit that right off the low, off the high there. There's one more short I'm watching for, and that, of course, is a pop and grind, right? Sometimes what happens is there's so much resistance up overhead that we don't get a reversal off the high, right? We don't get that 1, 2, 3. It simply gets whacked, right, and gets smacked right back down and begins to grind, and grind. This is a very easy one. If it races back lower and grinds down, simply draw that trend line right off those lows, bring it right up around the high, and like I said earlier, look left, find some prior swings, and my goal is always to grab that first test off the high of that channel. And again, like I mentioned earlier, it could be any of the entry patterns. I love bull traps. It could be a buyer failure above the moving average, failure into pullback combination. You guys are learning this stuff, right, in that free trading course. And again, if we roll over here, think about this, right? Those lows are an easy objective, specifically the amount above the range, the amount below the range. That'll give us some more definitive information as far as where the objective will be as we go lower. All right, so now we've talked about 3 different ways to short this. Let's talk about how to buy this thing right now, right? Could I buy this market? We definitely can, but we have to be careful, right? What's the problem? The problem is we're very bullish right now, but we're way too high up to be buying right now, right? There are 2 scenarios I look for to be a buyer. One would be a sharp pullback, not a 1, 2, 3, not a pop and grind, right? It's a sharp pullback, and then we start seeing the bears come in, and they're trying to run this thing lower, right? If we see those bears try a couple times, this is a great example where, again, we're very bullish overall. Like I mentioned earlier, this is not a bear market. We just are at a lot of resistance overhead with a range below. I'm not going to buy way up here, but if we can see a sharp pullback off the high and the sellers are unable to turn it around, right? Remember, there's a very big difference here, right? Do I get below the moving average and then jump? If we do, that's a reversal. Mark the low, mark the high, and short that sucker, right, with a setup off the high of that range, right? Or the pop and grind going lower. But if it just simply, V tops right here, smacks lower, ranges love to break out pullback, okay? They love to break out pullback. Ranges love to pop up, go into a range, break out, pull back, and then bounce right off the top of that trading range, and they'll try to go back and retest that high. So I like the idea of that long trade because we're buying nice and low. We're not buying into overhead resistance. But of course, the problem is that this momentum will try to turn over and get that pendulum swing right back in the opposite direction. So because that momentum now for the bears is a little strong, we'd like it to be, we want to give those sellers the benefit of the doubt, let them try a couple times and think about where their pain is, right? Think about where their stops are. You know, one of my first mentors in this business, like a gajillion years ago, he used to always tell me, look for areas where everybody's a buyer, right? And this is an area where everybody will be a buyer. Why do I say that? Well, because you get the range breakout pullback, you got rising support trend line, and if the sellers get stopped out, if the bears get stopped out, they have to buy their way out of their short position. That's a situation where everybody becomes a buyer. The buyers are buying off support, and the sellers are also in turn buying to get the hell out of their short loss, right? To get out of their short position as we go back up to retest the high. I like that for a long trade. But again, that will require that sharp pullback, trap those bears in, and use their stops for that run going higher. Now, let's talk about that one other scenario I mentioned earlier, and that's a range up here. There's one other scenario I want to get ready for here tomorrow. It's a possible range. Now, the CPI report coming out at 8:30 Eastern time, it doesn't seem as likely to go range bound, but who the hell knows, right? My job tonight is not to predict. We don't make money predicting. We make money by going through different scenarios. That way, no matter what the market throws at us, we have a game plan, we remove the emotions, and we simply trade the plan that we made the night before. So if we go sideways here overnight, which is possible, it doesn't seem as likely, but we'll see what happens. Now, if this is what we get overnight, get a sideways range, this range, of course, is a magnet. Okay, so if we get going sideways, there are now basically three scenarios that you want to be prepared for here tomorrow. All right, going up into that trading range. The first one is going to be a head fake off the high. Remember, lot of resistance, right, overhead here right now. Very difficult to be a buyer up there, right? Now, if we do go break out higher, what I can do is use that same crown reversal, one try, two try, bull trap, and that short back down again. Great way to sell it short. Now, if we do fake out breakout off that high, I love that crown reversal off the high. Now watch closely. Take the amount we go above, mark the amount we go below, and that creates a support area. Okay, now once we get down into that support area, now we look for, right? Now we look for a bear trap, right? Now we're overall bullish in this example, right? So we don't need to be that patient on this, but I do want to get those bears to come in, let them try a couple times here and use their stops as fuel for that run back going higher. Now keep in mind, right? I can't foresee the future that much, right? So we'll be looking for support levels. This pattern could be really anywhere around this area here. I just want to make sure I get below that trading range, trap those bears in, and use that range as the magnet and try to get that rotation going higher. Now, oftentimes, these bear traps off the low, they oftentimes produce some very strong breakouts going higher. How do we trade a breakout going higher here if it does go sideways in a trading range? We need to get one of those 1, 2, 3 moves, one of those 1, 2, 3 breakouts. So last scenario, we want a game plan here. If we do break out of that trading range, or if we end up going higher overall, the key will be to get that breakout, get those buyers to show us they want this. This is the key here. Remember, the buyers are running into overhead resistance, so we're expecting them to try and potentially fail back down again. But if they don't fail, right? If the news comes out, if the buyers like it, and they hold that pullback and they jump off of that moving average, that will be what we call a 1, 2, 3 breakout. We'll then go out and start finding some new channels off the high, find channels off the low, and start looking for entry patterns to get long off the low of that channel. All right. So remember, if we do pop up, we're not buying that first pullback, right? We're waiting for that breakout, that pullback, and show us that jump up through areas of resistance. And if they really get what they want tomorrow, right, we'll have some easy pickings off the low of that channel. So keep an eye out on these, right, on a range here overhead. There's a lot of ways to make money on this, both the long side and the short side. And again, if we keep on ripping going higher, right, if they pull back and they just blast this thing, right, ripping off that CPI number, we'll continue here to find bigger channels, continue here to wait for those deep pullbacks, trap those bears in, and keep looking for channel entries right off the low of those channels. All right, guys, I know I covered a lot on the S&P, but as always, I want to make sure we are ready tomorrow. And I like to go over the game plan myself personally because that gives me more, again, it takes the emotions out of things the following day tomorrow in our trade room. Now, how about some Nasdaq? We talked about on the 60-minute, everything's pretty bullish overall, right? We talked about now on the 60-minute, we've got kind of this range, right? This kind of range that we're kind of ultimately right now trying to rotate, kind of flesh out. It feels like this triangle, right? Rotating, which will probably rotate back and forth like that. This triangle could be a little bit, right? A little bit tighter here off of that low. It doesn't really matter. The reality right now is that we have a range here, just like last night on the newsletter, we talked about this on the S&P. We're anticipating now this Nasdaq will try to rotate and run higher, and when it does, we'll run into quite a bit of overhead resistance. There definitely is a small window of opportunity for the buyers to buy on the way up, so we'll definitely talk about that, and we'll certainly talk about some potential bull traps off the high. And then also too, one thing I want to talk about tonight too is again, tomorrow is the CPI number, right? So who knows? We may not get that run higher. It may jackknife and run lower, and there is certainly going to be some great bear traps. I think both on the Nasdaq for sure, but also too on the S&P as well. The S&P, right, could also end up rolling lower, and I want to talk about some entry patterns we can use there to buy off that low, and we'll do that, of course, on the Nasdaq. Now, let's drill down now to our tick charts. Again, tick charts are just easier to trade off of. They're a lot easier than time charts to trade. I use that 60-minute to give me a bigger picture. Look at this. So what's the most important factor right now on the Nasdaq? Well, a lot of this is very similar to the S&P, except we're not in that overbought position we were on the Emini. First of all, that trading range, right? It's a pretty obvious range there. Ranges act like magnets. We've got the amount below the range, the amount above the range. That creates resistance, lots of resistance levels waiting overhead. Now, as we try to go higher, what do you think is there really is only one entry pattern we can use to buy as we go higher. Again, we don't have a lot of open space up here. And if you've taken my free trading classes, you should already know the answer to this. Trap patterns, right? Traps are going to be your best friend whenever you're concerned about buying high. So as we go higher, the only real easy way to do this, it's not that easy at all. The only safe way to do this is to look for what we call a bull trap. This is not a setup that would apply very well to the S&P because the S&P is already up into its levels of resistance. But the Nasdaq, though, if we start seeing this thing accelerate going higher here, bear traps, right, which of course have a higher high in price and that trap below that low. A lot of examples of those trap setups in that free trading course, by the way. That's the easiest way, the only way to be buying as we go. And then just as we talked about on the S&P, if we end up going higher, this is exactly where a crown reversal would come in handy here, right? Let those buyers come in. Let them try to buy right into overhead resistance. I'm not a big fan of picking tops and bottoms. I'd rather wait for, in this case, the buyers to kind of rope themselves in, dig their own grave, wrap that noose around their neck, whatever metaphor you want to use on this, and then look for that signal, right, and get that short running right into all those buyers paying for that reversal going back down. Now think about that, right, because the amount that go above the range can then be projected down to low of that range. That now puts us, right, give or take here, somewhere down around these lows here for tomorrow. Nice, easy objective there for the sellers. We may also see this thing, right, pop up, V-top, grind down. And of course, that gives us now that pop and grind channel. Look for that short off the high. This, of course, we talked about already on the S&P, or we run up, we get below the moving average, we hold the pullback, and we jump below that moving average. That's called a 1, 2, 3 reversal pattern in our trade room. We'll mark off that low, we'll mark off that big high, and again, we go out looking left, finding prior levels of resistance, and we go looking for that short off the top of that channel around those prior swings on the chart. And again, this could be any of the entry patterns, traps, and failures are my favorite. So that's a pretty easy one, I think, kind of recapping there off the S&P. Now, let's talk about as we go lower, right? If we end up going lower, how would you buy off of this low? Well, let's talk about, because the same 3 setups we talked about off the high can easily be applied now, right, off the low. It's going to be a little bit difficult to short this thing going lower because we've got that trend line in the way. The only easy way to do this, if it does roll over and go lower, if we're worried about selling into support, is to look for a trap setup. This can also apply, of course, on the S&P as well. If we do end up rolling lower, look for that strong move down, that shallow pullback, that lower low in price, and that's where you can find traps, baby, right? That trap off that high. Now, be careful with this one because the amount we go above the range, below the range, I'm going to want to get into that bull trap setup before we take out that pendulum, before we get down to some of these levels of support down below, because once we get down to those support levels down below, now great place to be a buyer, right? We're at support. We got multiple ranges above us, which act like magnets. Now, what's the challenge in this one? It's momentum. Right? At this point, if we roll over, this is what's called rotation off the high, right? I call it rotation off the high. We're rotating off the high of that trading range. What that means to us is this is a lot of momentum in the short term, right? On our faster time frames, this will look very, very bearish. And because of that move going down so far, we have to assume the sellers in this case are going to put up a fight. They're probably not going to roll over and let this thing just roll back higher here. They're probably going to try a couple times to keep it going lower. Once I see them try twice, then I can use their stops. Then I can use their pain. We mentioned earlier, this is an area where everybody becomes a buyer. Everyone's buying, right? The buyers are buying low, below that trading range. And if those sellers, if they get stopped out, bam, right? They become buyers, right? The sellers in the market get squeezed, they become buyers here, and we look for that run going higher. Now, a lot of times on these types of range reversals or bear traps below these trading ranges, oftentimes these things will pop up, start running higher, and remember, it's going to want to rotate back in the opposite direction because that's what ranges do. They rotate back and forth, right? So if we do get that bear trap off the low, we then have a pretty good idea of where the market wants to go, right? Give or take a few points, and we can now go out and start looking for things like bear traps on the way higher. What I do is I go out and draw a trend line off those highs. I bring it down off the low, and I start looking for entries off the low of that channel, trap setups, failure patterns. So this is what we call a failure into pullback combination, right? It's basically a seller failure pattern, a 2-try failure. And then as we start to roll higher here, we then look for pullbacks off the low of that channel because, again, we know how ranges work. We know the range will want to rotate back up and take out some of these highs, right? It's a very, very easy way to make money tomorrow off the low of that trading range. And the same thing will apply, of course, to the S&P 500. Now, one more thing you want to be aware of here is, of course, if we do end up really, really running lower, if it really races and goes lower here, if it really gives a lot of momentum to the downside, this is where you have to anticipate you're going to pull back and retest that low. If they retest that low, because remember, anytime we see a strong move in one direction, we expect to pull back and a retest, in this case, a retest of the low. Obviously, the opposite is true if the market goes higher here. But once they retest the low, that's mission accomplished. We can now look for the bears once, the bears twice, trap those bears in, look for that failure into that pullback combination, and we can look for those entries off the low. And obviously I'm keeping it simple right now. We've talked a lot about these already here tonight on the video, but a 2-try failure again, because we're so bearish in that example. And don't be surprised if it rips lower off that CPI report, pulls back. I'm not a big fan of that short because we're at support below a trading range. But if the short sellers do come out, they retest that low, bingo, that sounds good. Now trap the rookies in, right? Horrible place to be selling at support below that trading range. Trap those rookies in with that failure pattern. Okay, and then as we start rolling higher back into that range, we'll go out, connect those highs, and drill down and find the entries off the low of that channel. Another kind of variation of that classic failure into pullback combination. And remember, keep in mind, if they rip this thing lower, if they hold the pullback and they jump off of that moving average, nice strong jump, that becomes a breakout, and we'll have to re-game plan tomorrow morning. That, of course, is why we have a trade room, right? Obviously, I can't predict everything here for tomorrow, but that will give us a pretty solid game plan on both the Nasdaq and the S&P here. So the key takeaways right now are, as we're going higher, be careful going higher here. Don't try to pick those tops. Look for those reversals I mentioned earlier off the high. And then again, if we do get whacked down here, trap those bears in and looking for that run back up. Like I mentioned earlier, lots of traps we're looking for here tomorrow, and everybody waiting to see what that CPI number will come out as and how the markets will view that CPI. And remember, we don't trade the news tomorrow. We trade the reaction tomorrow in our trade room. And speaking of our trade room, tomorrow morning, 8 o'clock Eastern time, if you're tired of missing the best trades right now, if you're having trouble qualifying for one of those prop firm accounts, right, come out and trade with us every morning in our morning trade room, 8 o'clock Eastern time every morning. It's a great place to learn and trade along. I'll put all the membership links down in the description of the video. I'll put the free video classes links down there as well. If you need any help getting registered, getting started with that stuff, don't be afraid to call the office. I'm always here to help. And of course, we have live chat as well, which is there, of course, to ring us up here if you need help with anything along the way. All right, guys, hope you liked the video here tonight. Hope you learned a lot in the lesson here this evening. Tomorrow, we trade this stuff together. Hopefully, I'll see you tomorrow morning at the opening bell in the trade room. If not, we're going to come back tomorrow night. We'll do it again and get ready for a PPI Thursday. Get more big news coming later on this week. I'm getting excited just thinking about it here right now. But let's get some rest tonight. Enjoy your evening. I will see you tomorrow morning at the opening bell in the trade room. If not, same time, same place tomorrow night, and we'll do it all again. Guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.